Welcome to Higher Level Accounting from the 2014 exam, question 6. So, we begin by being asked to calculate the company's reserves or their profit and loss balance at the beginning of the year. And we do this by putting together a list of the assets and liabilities. Now we're told in the question that the buildings and grounds are 620,000. But remember, in bold writing under the first paragraph it tells us that there are 3 years accumulated depreciation. So we must remove that 3 years worth of depreciation for each of our fixed assets. That gives us 582,800 for buildings, and it gives us 49,000 for equipment. Likewise with vehicles, we must remember to take away 3 years accumulated depreciation, so it's 90,000 minus the 54,000 to give us 36,000. Moving on, we look now at our investments, and according to the question we have 5% investments which are worth €40,000. Next up is our two items of stock. We have an opening stock of the shop, 3,400, and stock of oil, 1,900. We also have contract cleaning, which we have prepaid, of €400. Next up is the cash at bank. Now, cash at bank, I've highlighted it with a star because it's not given at the top of the question, rather it's part of the receipts and payments account, and we need to go and find that at the beginning of the receipts and payments account. That gives us a total of 719,500 for our assets at the beginning of the year. And so we move on to our liabilities. Our first liability is creditors for supplies. That is €1,600 as given to us in the top paragraph. Next up, clients' fees paid in advance is 6,000 because given that they have paid in advance, we now owe them €6,000 worth of service. The next two items I have highlighted as well, because neither of these appear in the top paragraph. You have to go to the payment section of the receipts and payments to see the loan and the loan interest. Well, with regard to that, it tells us that there was a payment of 56,000 for the loan and the interest. Now the loan of 50,000 means that the interest was 6,000. Now 12/15ths of that are 4,800. So we work it out that the loan interest due at the beginning of the year was 4,800, along with the loan of 50,000. Finally, we wrap it up with our issued capital of 450,000, which totals 512,400 euro for our liabilities. Now, assets less liabilities gives us our reserves at the beginning of the year, and that figure is 207,100. And that concludes part A. Part B of the question asks us to put together a shop profit and loss account for the year. So we begin with our shop receipts or sales of 45,000, less our cost of sales, which is made up of opening stock plus purchases minus closing stock. That's 30,000. So that gives us 15,000, what we would normally call gross profit. Then we take away our expenses. First of all, light and heat is 400, insurance is 800, telephone is 500, and then wages and salaries, it's 40% of the 22,000 figure, is 8,800. Our total expenses therefore add up to 10,500, and when we take that away from our profit, we have a profit from the shop of 4,500. Part C of the question asks us to prepare a profit and loss account for the end of the year. Now, essentially this is the income and expenditure account for the service firm. So we begin with our income. Our first income is the profit from the shop, and we've just worked that out in part B to be 4,500. Next up we have investment income received. Now this is the amount of investment income that I should have received. That's 5% of the 40,000 euro investment, which is 2,000 euro. Our final income is client fees, and our client fees figure is calculated based on a number of adjustments. To find the figure for client fees, we know that we have received 330,500, and with that there was prepaid for this year 6,000, so we need to add that. Prepaid for next year was 6,500, which we don't want to count as part of this year's, but there was another 800 due at the end of this year for this year, giving us a total fee of 330,800 for our client fees. That means our total income is 337,000 euro 500. And now we move on to our expenses. Wages and salaries is the remainder of the wages, the 60%, which is 76,600. Insurance is 6,800, and we're told that 800 of it was for the shop, so it's only the 6,000 that we apply for the rest of the business. Light and heat, 4,660, straightforward. Purchases for supplies, 36,300. And then our loan interest. Well, we worked out loan interest earlier, and the 3/15 that remain, as in this year's loan interest, is 1,200. Next up is laundry, and laundry was 2,500. And then the telephone bill, 1,600, less the 500 for the shop, is 1,100. Now we move on to our depreciation. To calculate depreciation for buildings, it's fairly straightforward. We began with buildings worth 620,000 and we had an extension of 230,000. So our buildings are worth 850,000. At 2% per year is 17,000. Our next item for depreciation is equipment. We began with 70,000 of equipment and we bought more equipment for 15,000, so it's 85,000. At 10% per annum gives us 8,500 for depreciation of equipment. Our final depreciation item is for vehicles, and to get vehicles we need three things. One, we need a depreciation for the vehicles that we had all year. Then we need to add to that the depreciation for the vehicle that we sold, and finally add to that the depreciation for the vehicle that we bought. Well, the vehicles that we had all year, we began with 90,000, but we got rid of one which cost 40,000. So we had 50,000 worth of vehicles for the whole year at 20%, which gives us 10,000 for those vehicles. The vehicle we sold had cost originally 40,000, at 20% is 8,000, but we only had it for half the year, so it's 4,000. Then the vehicle we bought was 59,000, at 20% is 11,800, but again we only had it for half the year, so that's 5,900 for that. Those three combined give us a total figure of 19,900 for depreciation of vehicles. The next task is to work out the profit or loss, in this case a loss, on the sale of the vehicle. Well, we know that we bought the vehicle for 40,000 originally and that it depreciates at a rate of 20% per annum. I had it for the whole of 10, 11 and 12, and I had it for half of 2013. So that gives us 8,000 per year and 4,000 per half year, so that the cost, 40,000, less the total depreciation, 28,000, means that it's worth 12,000. Now we were given an allowance of 9,000 and therefore we made a loss of 3,000. Our final expense is contract cleaning for 3,500, which means we have a total expenses of 180,260, which I take away from my income, giving me 157,040 euro net profit for the year. Add to that our reserves, which we calculated in part A, of 207,100, tells us that our profit and loss balance for the end of the year is 364,140. So part B asks us to put together a balance sheet for this service firm, and we begin with our fixed assets. Our first fixed asset is buildings and grounds, which were revalued to 900,000. That means there was no charge for depreciation, so the net book value is also 900,000. Next up we have equipment. Equipment began as 70,000 and then we added 15,000 to it, so it's 85,000 at cost. The accumulated plus this year's depreciation is 29,500. So the net book value is 55,500. And now on to vehicles. Well, vehicles we know is to be recorded as 109,000 cost because it was 90 minus the 40 plus the 59. And then the depreciation is based on accumulated depreciation of 54,000 plus this year's depreciation of 19,900 less all the depreciation on the vehicle that we sold, 28,000, giving us a total figure for depreciation of 49,900. Net book value therefore of 63,100. We add up our cost and we add up our depreciation. We don't need these figures anymore, so we double underline them, but we do need the net book value figure, which is 1,018,600. And so we move on with investments. Our investments were worth 40,000. So we are now running with a total of 1,058,600. We proceed with our current assets. For our current assets, we begin with investment income still due. Now we worked out that investment income was 2,000, but according to the receipts and payments, we've only received 1,200, so we are still due 800. Then we put in our closing stock for the shop and for oil. That's 1,400 and 600 for oil. Our next item is contract cleaning prepaid, and the figure for contract cleaning prepaid, we're told, is 500. Then we have our client's fees which are due, that's 800, giving us a total of 4,100 for our current assets. We move on to our liabilities now, or our creditor amounts falling due within 1 year. And they're made up of the following. Electricity due is €360. Client's advance deposits, or prepaid for next year, is 6,500. And we now owe them a service, so it goes in as a liability. The bank balance at the end, and you can find this on the the debit side of the receipts and payments as a balance carried down, is 135,000, which will be brought down as a loss or as an overdraft. And then our final figure is creditors for supplies, 2,500, giving us a total liability of 144,360, which I take away from my asset to give me net current assets of 140,260. I'm going to take that away from my fixed assets plus investments to give me €918,000, 340. And we finish up with our finance by section. Now, there are no loans, so we go straight into share capital and reserves. And our share capital and reserves are made up of ordinary shares, authorised and issued. We have authorised 600,000 shares, but only issued 450,000. Next up is to calculate our revaluation reserve. Well, we know that our buildings in total were 850,000 at cost. Minus the accumulated depreciation and also minus this year's depreciation means that the real value of our buildings was 795,800. We revalued up to 900,000, which means we revalued by the amount of 104,200, and that's our revaluation reserve. Finally, we add our P&L balance at the end of the year, and that was 364,140, and we add all three to give us €918,340 as our balance. Thanks for watching.